make this happen. So I think we're ready.
Looks like it's happening.
All right. Is that us? Make this happen. All right.
Have a good time, Scotty.
Thank you, Jeremy. I think we're ready. All right.
Looks like it's happening.
All right. Is that us? Make this happen. Oh, it's a delay on that end. Hold on. All right. We're hearing it. How do I
have a good time, Scotty?
How do I shut it? Thank you. Oh, mute me. Okay. There we go. All right. So here we are at the dollar index, where we start every day. If you don't know what they are, hi, Erica. Larry's not in Toronto, but he's in Canada. Yesterday we had ISM. We got a double top in place, and you can see MACD's talking to you. MACD says we may go down. All right. Now we do have a lower high here, which means this might be a bear flag for the sell. All right. But at the same time, we have a flag pattern right here, which says we might go up, right? So it's not sure yet what it is. If it breaks up, then we'll know it's up. If it breaks down, we know it's down. In the meantime, we're in no man's land here. So we're going to have to let the charts tell us what it is doing, all right? So we'll go over to the euro first. And euro is telling us it might be trying to bounce, all right? So you got another flag here from this move down. You can see MACD is talking to you already. Remember this, MACD points the way. So if MACD is pointing up, that's what it's trying to do. And MACD is pointing down, it's trying to go down. MACD is pointing up, it's trying to go up. MACD is pointing down, it's trying to go down. See? All right, so it's just a visual. It's not a trade setup or anything like that. It just tells you, hey, what you might think of. All right, so maybe we're flipping here, but we also could be doing a flag pattern for the downside. We are at the bottom of the range, which is a very small range there, as you can see, but we are in a down channel. All right, so how do we figure this out? All right, that's where the three musketeers come in play. So since you're new here, we have a lot of new people. It's good. It's great. These three charts are Heikin-Ashi charts. They're on different time frames. They give us two pieces of information that we can't get any other way. Who's in control of the currency and what is the order flow? We call them the three musketeers because the three musketeers had a saying, all for one and one for all. So if these charts are all saying the same thing, that's what it's trying to do. We're trying to go down. No, we're going sideways. We're trying to go down. All right. Then we look at the oscillators, which are all lagging, so they never tell us what it's going to do. They only tell us what it is doing. They're trying to go up. 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 All right. So you see the quandary. All right. We only use this chart once we're in a trade. It's called the confirmer. We'll talk about that if we get in a trade. All right. So what is it telling you? It says we don't know what we're doing yet. We're waiting on the dollar, right? So that means that we're going to have to figure this both ways, all right? So euro dollar has a 69 pip ATR. We find the 5 o'clock candle from yesterday. That's 1600 for me at the New York fix right there, all right? And we put a high in after that. So we're going to use that high for the down move. We're going to go 69 pips down. And there we go. And that's the target right there. And we don't have 55 pips left if it breaks. All right, we go find the target to the upside. That's this bottom here. All right, after the 5 o'clock candle, put a new bottom in, which means that as the ATR is the day chart candle before it happens. So from 5 o'clock yesterday, if they put a high in, that's the high for the day, and the low should be here. If from 5 o'clock yesterday, they put a low in, then the high should be up here. All right, that's what we're looking for. And we know it ahead of time. That's the key. All right, now here we got to put slope support across the top here. And I think I'm going to go across the body. Yep, there we go. And now, if we break into this area, will we have 55 pips? That's the big question, all right? Let me take up here to the target, and down we go for 55 pips. And we might get 55 pips, all right? So the opportunity is here, right here. Right. By the way, the euro dollar is a dog. We trade it about maybe 5 times a year. maybe 5 times a year, maybe less. All right, so we're going to break and hook back to this line. Then we have 55 pips. And now you can easily see the trade from there. Trade 1 is here and trade 2 is here, and we'll hold for the fib right above the ATR. There it is. All right. So how do you trade that? All right. So trade 1 is in the head, trade 2 is in the body. It's an upside down snowman. 1/3 of my lots with 3 times the technical stop. When trade 2 goes in, it has 2 lots or 2/3 of my lots. This stop gets moved to break even at minimum, and you follow it up to the target. When you get close to the target, it's a 1-to-1 risk to reward ratio. If I'm 8 pips away from the target, my stop is 8 pips. All right. That means I'm really 16 pips away. All right. And once I hit the target, I'm within 4 pips, and then we start watching. If we got little candles like this, we take the 2/3 off and put them in the bank. If we got big candles like this, we hold all 3 for a potential of the next target. All right. Very simple. Don't make it complicated. That's it. All right. Pound dollar. All right. Same thing. Got a nice look here. Is this a bull flag here, or are they making the turn? All right. What does MACD say? MACD tells you, yeah, we're pointing the way up. This might be what it's trying to do. All right. Now we haven't broken the 0 line yet. You don't have a MACD cross yet. All right. But if it does break here, right here, all right, if it breaks the T3 and the MACD 0 line at virtually the same time, it's 82% going to go in that direction, which is better than you can trade. All right. So you need to be aware of that. All right. Trading is statistics in action. Most retail traders have no clue what the statistical probability of what they're doing actually is. All right. We're not like that. We know the statistical probability. All right. So there we go. All right. How do we prove it? We go down to the 3 Musketeers, see what they say. We're trying to turn it up. We're trying to turn it up. We're trying to turn it up. This is a 240. The bankers turn to 240. This is a 60. The bankers enter and exit on a 60. All right. We can't trade the 60 because the stops are too big. So the 10 says, yes, we're trying to go up. And you can also see you got 2 Tom DeMark lines showing you're in a wedge, right there. All right, so they say we're going up. All right, now you always go with what the chart says. It doesn't matter what if you get bias involved. Yeah, but it's going down. I know it's going down, and it goes 400 pips in the air, and you're not in it because you're biased. You don't do that. All right, pound dollar, 89 pip ATR, which is also a fib sequence number. Find the 5 o'clock candle from yesterday, 1600 for me right there. And we put a low in on the 1700 candle, just one candle later. And that's going up for 89 pips, 89 pips. And there's the target. Let's see if we even have 55 pips left. All right. And there we go. And you go, we got 55, but we barely got 55. All right, as you can see. All right, so we're going to have to take this top off right here. Going to have to take this top off, and then it's going to go break up and hook back to it. When it hits there, that's trade 1. All right, now trade 2 is above wherever that wick goes. Wherever that wick goes. So trade 1 is here. So you can see it's not a great trade. It's there, but let's hope we can find something better than that. Man, nasty. All right, there we go. All right, so pound dollar to the upside, maybe. It's just so slim. All right, dollar Swissy. Now it follows the dollar index, and what is it telling you? It tells you, MACD is telling you, by the way, we're making the rollover to the top. We're above the 0 line break. Candles are moving up. We took out the break, the flag pattern here with a break, hook, and we're in the go actually there, right? It could be a bear flag, Thomas. Yeah, it could be, but the chart says we're going up. So that's why we got to be leery of it, all right? So we got conflicting information until it all says the same thing. We're like, I don't know, it might be a bear flag. Let me go back to that. So we're talking right here. So you're absolutely sure it could be a bear flag, but the chart is not yet telling you it's going down, all right? It's all it's telling you is we're going up. Now, if it makes a turn and comes down, yeah, then we're confirmed it is a bear flag. We'll flip the target and see if we have any room, all right? We got plenty of time because you won't trade it till you get a break, hook, and go of the bear flag. Well, what is that? That's 20 minutes. We got plenty of time to refigure it to the downside. So good point, Thomas. Way to go. All right, dollar Swissy, you get a big hint right here. If you're ever in doubt about the dollar index, you go over here and see what the dollar Swissy is doing because the Swiss franc is pegged to the dollar. All right, it doesn't float against the dollar, it's pegged against the dollar. All right, so it says we're going up, as you can see right there. MACD points the way. Let's see if we have any room because it has a low ATR, 69 pips. Find the 5 o'clock candle right there. We put a low in after that, was over here. We go down and get the low after the 5 o'clock candle. We go up 69 pips, and we only got about 15 pips left. Nothing there. Over to dollar yen. Thanks, Jerry. Jerry says, glad you've joined us. Be sure to tell your friends to do the same. Yeah, it's an open house. Take advantage of it. You know, we do. This is what we do every day in here. An open house means we're going to show you our house. And this is what we do day in and day out. All right. And we find opportunities. All right. There we go. All right. There's Jerry right there. All right. All right. Over to dollar yen. What do we got? We got a flag pattern. All right. There we go. Flag pattern, but this was non-farm payroll. All right. So the question is, are they going to make that continue up there? All right. So remember, the base currency here is the dollar, but the yen is a very strong cross. Most of the time, it'll follow the dollar, but it doesn't have to. All right. So what does MACD tell you down here? MACD says we're pointing the way to the downside. All right. Now it's still above the zero line break, so we're officially a buyer, and it could easily do that right there, at which case we'd be interested. All right. All right. We know the dollar is tentatively maybe going up. Dollar Swissy is telling you that. That's all. That's the only clues we have. Right. We don't have all the clues yet. Dollar yen is 121 pip ATR, 5 o'clock candle from yesterday, 1600. We put a low in after that. It's right there. We go up for 121 pips, 121. And there's the, I went down, sorry. Let me go up. All right, there's the target. We're going to have to break the top of here, and we have a little better than 60 pips left with a 2.618 right on the other side of it, and then range top. All right. Let's see if I can find a 1000 pip. I do go from the swing low of the flag to the swing high of the flag to the swing low right here. And now I see the 1000 is right there. All right. That's not very big, but above here. Now, why do I want to find those? Because these are the only three places I move my stop. The only three places where you have a mathematical reason to do so. If you don't have a mathematical reason, the bankers aren't going to stop there. If there's a mathematical reason, they might. All right. So it's your job to find those. Now we see the opportunity right here, all the way to the range top, because we could get that. All right. We're not going to trade it in the range because we get stuck in the range all night long. It might not go out of the range. Just like last night, it never went out of the range. Do you want to be upside down all this time? I don't. All right, trade one is here to the 1.270, and trade two is here, maybe all the way to the range top. Trade one, trade two. Remember, 1/3 of your lots in the head, 2/3 in the body. All right, dollar yen, not a bad opportunity. It's a whole lot better than that pound, I can tell you that. All right, pound dollar is not a good trade this morning. It's there, but it's not very good. Aussie dollar, all right, Aussie dollar hanging out here. Big flag again right here. We are below the zero line breaks on the MACD, so we are officially a seller, but you can see the bulls are trying to take control. Bulls are trying to take control. All right, what do the three musketeers say about it? And the three musketeers say, we're trying to turn it up. We're trying to turn it up. We're trying to turn it up. What do the oscillators say? We're trying to turn it up. 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 Gee, they're trying to turn it up. That means they think dollar is going to go up. Down, not up. All right, so I'm going to take this off of here. All right. And we'll find the target on Aussie dollar and see if we have any room left. We've got a low ATR, only 57 pips. All right. The ATRs are extremely low. In fact, I don't ever remember seeing them this low in the winter, ever. I don't ever. And I've been trading 23 years. So don't even know why this is happening, and neither does anybody else. All right, there's a 1600 candle, the New York fix. We put a low in, 2 candles later, we take that. We're going up for 57 pips is all. And you can see right now, we don't have an opportunity because we don't have 55 pips left. Walk away. Euro yen. All right, Euro yen, we're stuck here. Oh, I need to get a fib on here. Hold on. swing high, swing low, swing high, right? Every pullback creates a swing high, swing low, swing high, right? And there we go. All right. So there's the 1,000 just below that. Why do we care about the 1,000? All right. So the bankers like things balanced. So the 1,000 is 100% of this is wave one. It's 100% of wave three. All right. That's what it is. All right. And they go to it. If you do your 1,000 work, you're going to go, man, oh man, and they go to that probably over 90% of the time. All right. So remember, it's about statistical probability. We got to trade you a channel to the downside. We do have a target down here, way down here. This is the blog post this morning. All right. Now, if the dollar goes up, this will happen. If the dollar goes down, this is not going to happen. All right. Euro yen, 115 pip ATR. That target is at 158.73. All right. Holding for the 2.618 at 158.65. All right. So, what do the Three Musketeers say? And the Three Musketeers tell us, we're trying to turn it down. We're trying to go down. We're trying to go down. That's nice. What do the oscillators say? We're going down. 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 They're going down, folks. Nice. All right. So now we see where the opportunity is. It's going to be you can do it on the pullback here if you want. All right. So if you take it on the pullback, that's trade one. This is the whole trade. Let me put the whole trade on here, right there. All right. So if you take it on the pullback up here, trade one is here. Trade two is here, right there. If you wait for the break hook and go down here, trade one is here and trade two is here, right? So this is taking it off the top up here is a more aggressive trade, but you're going to be rewarded with an extra 30 pips for that, taking on that risk. You don't want to take on that risk. You wait for the break hook and go below the 1,000, all right, because the 1,000 is a bounce point. All right, so below the 1,000, trade one, trade two, all right? Now, fast trackers, you will trade it like this. Fast trackers will take it off the top, trade one, then this is trade two, and this is trade three, all right? Now, how are they going to trade that? They're going to trade it like this. 1, 2, 3, 1/3 of my lots, 2/3 of my lots, and 3/3 of my lots here, because we're going to take the profit we made on these two right here. So we're not risking our money, and we're going to risk it all here for the target. Now, if that happens, we risk 2% up here. We risk 2% on here, which means we risk 4% of our margin today, but never more than 2% at any one time. Never risk more than 2% of your account. That way you always have 98%. If you've blown up your account, you've broken that rule. And I've blown up many accounts. So I know what it's like. I'm not talking, I know I'm talking to the choir here, but just so you know, I'm not pointing any fingers at all. All right, there we go. So Euro yen's on the table. Nice. And that's why it was the blog post. Let's go to pound yen. Should be looking similar. And pound yen has got a breakout up. Well, it might be because I have the trend wrong. Let's go see what happens. We're still below the zero line break on MACD here on the 60. All right. By the way, we're on a 60-minute chart. We do not go to the 10-minute chart until the 60-minute tells us to. Why is that? Because the bankers trade the 60. They enter and exit on the 60. If they don't see it on the 60, they're not going to execute. So we got to see it. If it's a breakout, it has to start on the 60. Then we go down to the 10. We got plenty of time. You got 20 minutes, all right, for a break hook and go. All right. Are we breaking out north? Oh, I don't know. Let's go see what the Three Musketeers say. And they say, yeah, we're trying to go up. Yeah, we're trying to go up. Yeah, we're trying to go up. This is curling up to go up. It's a 240. It takes a lot to turn it. All right. So that means there's a lot of pressure pushing it up. We're still going down and we're going sideways. All right. So they're telling us this might be a real breakout. So what we got to do is get rid of the downside stuff. All right. Right here. And we'll take that off. Get rid of the downside stuff. We'll leave the fibs on here, and we find the target. All right, so we're going to find the target by the 1,000. It's going to be a really big one because we got to go all the way down to here, swing low, swing high, and swing low right there. And 1,000 is, it's off the charts. That's how far up it, way up here. But it's valid, right? We're going to replace that channel with this right here. And it says we may not be broken out yet at all. All right. But the chart says we're going up. All right. So that's the area right up there. 100 ATR on pound yen is 134 pips, 134 pips. Find the 5 o'clock candle right in there. We put a low in after that. So on that wick, we're going up for 134 pips, 134. We're a buyer, and there's the target. All right. So the 1,000 is not even in play today. But we can see the trade. If we get a break hook and go here, all right, the opportunity is here. All right. The ATR is here. We'll hold to the 0.618 and the double top up there. You can see the trade right here. Trade 1 is right there. Trade 2 is right there. See how easy it is. Now, that says GJ is going up. And that means either the GJ is wrong or the EJ is wrong. All right. Now I got the EJ going down. I got the GJ going up. One of those is wrong. So that immediately gives you caution. You're going to have to really be sure if you take either one of these trades that that is what it is. All right. So, this is a dilemma you're going to face virtually every day. All right. New Zealand dollar. All right. New Zealand dollar, and we're doing a flag pattern. MACD says we're trying to go up. We're still below the zero line break, so we're officially a seller. What do the Three Musketeers say? And see, they give us huge clues. You can't get any other way. We're going sideways, and we got pressure pushing us up. We're trying to go up. We're going sideways, but we got pressure pushing up. We're going up. We're going up. We're going up. Oh, and MACD says, and we're trying to go up. Once again, it tells us we're going up. All right. So New Zealand dollar only has a 55 pip ATR. Find the 5 o'clock candle from yesterday right there. We put a low in after that right there. We go up for 55 pips, which is my default. And there it is. But we won't be able to trade this until we break slope support here, which means we don't have 55 pips left. Walk away from it. All right. Get away. All right, so the first pass through the currencies is to eliminate any currencies that can't give us a return on investment. All right. Then we come back and major in the 1, 2, 3, 4 we may find. Out of 20 currencies, there's only 1 or 2 real opportunities per se. 1 or 2. GJ is building a C. Could be, Larry. Cup and handle could be, yeah. So Larry's on top of those cup and handles. All right. So we may have a cup and handle here. All right. Then we get a little push down, and then we go like this. All right. So let's put a little note on here, Larry, so we can keep track of it. All right. There we go. We'll see if it is. Yeah, there we go. Nice job, Larry. Way to go. All right. Over to exotics, Aussie yen. All right. All right, so I've got it set to go down. It was an alert from last night that never went. So that is the real ATR right there, 66 pip ATR. You got to get it up here because when it breaks this bottom, you don't have 55 pips left. So it's a little dicey because of that. We go down to the target and we go up 55 pips. All right, there we go. That's 55 pips. So we do have 55 pips. So anywhere up in here, we can take that trade. That'll be sweet. All right. All right. Let's see what the Three Musketeers say. You can see the bulls are trying to take control of it here. We are above the zero line break here. All right. So we're officially a buyer. But if we break through here, all right, we already broke the T3. We'll be breaking the T3, which is right there, and we'll be breaking this. By the way, the T3 and the MACD, if they break at the same time or within a candle, it's 82% going to go in that direction. 82%. Now on TradingView and on MT4, it's 66%. All right. Well, it's pretty good. 66% is pretty dang good. It's not anywhere close to 82, but it's not bad. All right. All right. Let's see what the Three Musketeers say about it. And the Three Musketeers say, trying to go up. We're trying to go up. No, we're trying to go down. We're trying to go up. We're trying to go down. We're trying to go up. All right. So what does that tell you? They don't know yet. All right. We'll keep it what it is. Don't forget if it breaks up, we're not going to trade it till it breaks above here anyway. And it takes a break, hook, and go up. All right. Which takes 20 minutes. A 10-minute candle up, 10-minute candle down. So we have plenty of time to refigure it if it proves it's going up. But we got to be ready for the down in case it does go down. So the whole trade is right here. We're going to hold for the 1.618, and we're going to move our stop at that bottom right there. And the trade is right here. Trade 1 is right here. and trade 2 right there, that bottom there, and break of that support is trade 2 all the way down. So Aussie yen is a pretty nice opportunity to the downside if we get it, all right? And it's a very smooth currency. It's one of my favorite currencies. Well, it is, it's number 2. Number 1 for me is the EJ. Number 2 for me is the AJ. All right, Euro Aussie, all right? Euro Aussie broke through here last night as we anticipated, but never went anywhere. You can see MACD's telling you, yeah, we're trying to go down. We're trying to go down. We're trying to go down. Let's go down to a 60-minute chart. And now you see down here, we got a pennant, or actually a symmetrical triangle. We got a symmetrical triangle. Now it came into that like that, which means we're coming out of here like that. So this target is the same for the symmetrical triangle. All right. Now, let's see if we have any room here at all. All right, so let's go down. It is a target because it was a alert from last night and never went. Euro Aussie has an ATR of 111 pips. So 111 pips from there. Actually, we got to change this and bring this back up to the high after that. So you can see we don't have 55 pips left. So walk away from it. Just walk away. Nothing there. Pound Aussie. Wow, Pound Aussie is making a big move to the upside. All right. So is this a pullback or is this a reversal? Let me take this off here. All right. Or is it coming up to go? This is a real estate of the week trade. We got part of it last night. We'll see what happens. Now, traders, this is why you go to break even. Okay. So trade 1 went, made a few pips, came back up. You got to break even on trade 1. All right. That's it. A break even. All right. If you traded the real estate of the week, if you're trading it intraday, you made about 40 pips. All right. So there we go. All right. Are you going up? We're below the 0 line break right now. Let's see if we got what the 3 Musketeers say. And they say, yeah, we're trying to go up. No, we're going down right now. No, we're going up. We're trying to curl up to go up. We're going down. We're going down. All right. So it may be just trying to get to the top here to go down. All right. Well, do I know that yet? I don't know that yet. I'm just surmising. All right. All right. Let me pop a fib on here from the swing high to the swing low and see where we are right now. So we're right at the 50% fib right there. So, you know, the 0.500 is a turning point. And you can see it's turning already. You got to close and reverse to the downside. The bulls are fighting it. They're still trying to take it up. All right. You say, well, why are they fighting that? Because of option contracts. These bulls have an option contract up here. These bears have an option contract down there, and they're trying to make it happen. All right. Why do they do that? Because the option contracts pay off in the millions and billions of dollars. Millions and billions of dollars. Okay. So you can always check the plain vanilla options by going on the IC, come down here, see options right there. It'll take you right to them, and you just go like this, click it up right there, click open the Google sheet, and today is Tuesday. And here we go. So you can see 3.5 million, 371 million, 930 million, $1 billion. Okay. Nothing's in play right now because it's bolded if it's in play. But you can see now, notice the five numbers. There's 5 numbers right there. There's a 5 number right there down in here. 5, 5, 5, 5. This is why you don't use a stop with a 5 in it. You put a 5 on it, there's an option contract sticker sitting on it. The bankers go get the option contract. You get stopped out and you go, the broker stopped me out again. No, he didn't. No, he didn't. You used a 5 in your stop. If you'd used a 7, you'd have been fine going down, or a 3 going up. And when it hits that option contract, it executes it instantly. All right. So these are all the nuances that you can't get. You can't Google it and find that stuff out. It's not possible. Bold is in play. Don't know what bold. Bold. Oh yeah. If it's within striking distance on that on here, let me pull it back up. If it's within striking distance, they will bold it so you know this is in play today. None of these are in play. These are the option contracts, but none of them are in play today because we're not close enough to any number here. But you'll see, we'll look at it tomorrow and see, maybe we'll have one tomorrow that's in play. You'll see it'll be bold instead of just plain old text. Okay. I hope that answers it. All right. All right. So I'm going to take this off for now. All right. Because I don't know if it's going up and I don't know if it's going down, and I don't want to be biased to the downside. All right. As you can see, this is a range. So I'm going to put the range on, and now I instantly know I'm in a range. All right. So there we go. I can see it. It's a visual business. I can see that, and I also see that I got a breakout down here, going from the top right across there. So there's the breakout up, all right? MACD pointing up. Three Musketeers going up. We were trying to go up. We're still trying to go up. Curling up to go up. These are still, oh, that's curling up to go up. So it tells us it's going up. All right, let's find the target, pound Aussie. All right, let me get rid of this to the downside also. All right. No, they do them a month ahead of time. They did them last month. They look at the chart. In fact, one of our fast trackers does that for European banks. He plots where the option contract should be in 30 days, and then he gives that information to them. They pay him for that, and they trade to those option contracts, those areas. All right, so wherever that is, all right, they're major support and resistance areas. All right, so most banks have somebody that's a Neil Mangle, one of our fast trackers. Most banks have a guy like that who figures out the big position. He's typically an Elliott waiver, and he doesn't really trade much, but he's a great analyst. So he typically finds that where that target might be in 30 days, they place an option contract on it. If it pays off, they got a couple $100,000 and invested, and they make $3 million or whatever it happens to be. So that's it. And they're not $3 million. They're in the 3, 4, 500 plus $1 million. Those payoffs are. All right, back to the ATR here. All right. So pound Aussie ATR is 118 pips. Find the 5 o'clock candle from yesterday. I gotta find it here. 1600 right there, and we put a low in after that. All right, we didn't go 118 pips. We only went about 60, so we'll go up for 118 pips. And there's the target. We don't have 55 pips left. All right. So it's done right there. I was looking at the UJ and watching if they'd push up to that option, but because it appeared it could reach it with the ATR. Somebody else is making that decision, not me, whether to bold it or not. I just know that if they're bolded, that they're telling you that's in play, and maybe not. Could be S. Kelly. So when you come in tomorrow, if you put your first name in there, it's hard for me to say S. Kelly instead of saying Scott or like me or Steve or whatever. That'd be great. Steven. Okay, Steven, thanks. All right, got it. All right, let's go check here in New Zealand. All right. We're not missing anything. You see, nothing's happening, so we're not missing anything. All right, so we got a breakout and we have a pennant. So let me get rid of that. And you can see the pennant. You go, I didn't see the pennant. Then you got pennant work to do. There it is. Okay. Now, that pennant should go to the upside. All right. That's what this pattern does. If you go up like this, we're coming out like this, and we're going to do exactly whatever that is. That's what we're going to do over here. All right. So these are the statistical probability. Is it 100%? No, but it's over 90. So therefore, you better pay attention to it. So the range top is the target for this pattern right here. All right, what's the ATR? All right, let's go find that. Euro New Zealand, 125 pip ATR. Find the 5 o'clock candle from yesterday, 1600. Right there, we put a low in after that. We take the low, and we're going up for 125. If we had a high, we go down 125 from the high. Oh, I went the wrong way. Hold on. All right, bye. There we go, up there. All right, so you can see. All right, so the range top is the pattern target. The ATR is that. I need some fibs in here. Can I get them on? I pop a fib from a swing high, low. I'm gonna do this little move over here. I'm gonna use the most recent. I can use that one, but I got one right here, and I like to use the most recent if I can. Swing low, swing high, swing low. All right, there's the 1000 and the 1270. All right, remember the 1000 may be all they go. All right, there are two targets every day: the 1000 and the ATR. All right, and then there are other targets, but those are the primary targets we try to find. All right, so there's the opportunity on a breakout. All right, what do we need? I need a break, hook, and go. Trade 1 is here to this top. Trade 2 is there to the range top. There we go. Nice. You're in New Zealand to the upside. That's pretty nice right there. If we get a breakout, we'll see. What do the Three Musketeers say about that? Let's go see them. What are they saying? Three Musketeers, they say, yeah, we're trying to go nowhere. We're trying to push it up. We're going nowhere. We're going down. We're going down. We're going up. Woo, it's nasty. Why is it? Because we're in a pennant. That means we get movement down and we get movement up, get movement down and movement up, right? And so this is why indicators can't follow that. They can't. That's why we don't use indicators for a trade setup. We use indicators to feed us information. These are the MACD and these oscillators are the only indicators we got on the chart. All right. Now there are algorithms making this happen using other stuff, but to making it go green or red. Right? But none of those is a trade setup. All right, Euro New Zealand's on the table. Pound New Zealand. Well, it's cranking up there pretty hard. Let me get rid of this. Let me get rid of this. Let me get rid of this. All this to the downside. Why? Because we might be going up. I'm going to get rid of this. I can always put this back on. I want to get as clear as a picture as I can so I'm not biased about what the thing is doing. All right, so now you can see it's just a big sideways move. All right, I'm going to go up here. Oh, get the wrong tool. Sideways move right there. And now you see where you are. I'm going to need fibs for that move. I'm going to get rid of that one, put fibs on for the swing low of the range to the swing high of the range, and I stop. Once you put a fib on, right? When you put a fib on, you've got to stop, and they got to prove to you that they know those numbers, 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 that they know those numbers. See that? They know that. And once you know that, then you know they know this number. Yep, they knew it. They knew this one. Yep, they knew it. So that means you're going to know that one and the top. So those are the three opportunities upcoming right now. All right. So we know that. What do you got on the chart? I have a range and I have a set of fibs. That's all I got. Let me get this big range off of here. Ooh, nasty. There we go. All right. So one other thing is try to keep your charts as simple as possible. You got to have the right information, but you don't have to have everything. You have to have enough information to tell you you're a buyer or seller and where are the barriers. The barriers are contested areas. The space between them is not contested. That's why you'll see bigger moves in here. That's why we look for the wide open space. I don't want to trade in a contested area. I want to trade in an uncontested area. All right. So what do the Three Musketeers say about it? And they say, we're trying to go up. We're trying to go up. We're trying to go up. We're trying to go, curl up to go up now. We're still going down. And no, we're trying to go up right now. We might break that any second now with that right there. That's all it tells us. You might go now. It does not tell you that's a trade setup. All right, I got a little flag pattern formed here. I need a break hook and go there. Where are we trying to go? We're trying to go to a target. We never trade. We always know the exit before we look for an entry. All right. Pound New Zealand, 143 pip ATR. Find the 5 o'clock candle from yesterday. 1600 right in there, right there. We put a low in after that. We take the low. We're going up for 143 pips, 143. All right. And I did it again. Buy. And there we go. Do we have 55 pips left? Let's check it. Thank you. We don't. So we don't have 55 pips because we'll get a break hook and it'll bounce above that 55 pips. So there's no trade on the Euro New Zealand. Now, if you get a pullback down in here, now you'll have a trade. So if it were to be able to come down here and go, all right, we're coming down in here to maybe to the 50% fib, now you'd have an opportunity, but you don't have an opportunity from up here. All right. Yeah, Craig, we can get those pip captures. Let's get pip captures real quick for Craig. All right. Let me get to the alerts here. So first thing I do is I tell you what I think the dollar is going to do. All right. So I had the dollar up. I have it up, but it may have topped out. If it reverses, replot the target. So everything's based on the dollar going up. What did the dollar do last night? All right. It went down and up. All right. So there you go. Went down and up. All right. Now it's coming down. All right. Looking more and more like it's going to come down. All right. So the first one that went and the only one of these alerts that went was the Euro New Zealand. All right. Excuse me. Euro Aussie. No, was he? Oh, okay. Wait a second. Pound New Zealand. Let me see. I don't think it went. Let me check it. I don't think that went. Yeah, it did. Sorry. All right, pound New Zealand was a sell. Let me get it here. 20696, 20696. Where's that? Right there. Right there. And all you got was about 40 pips. All right. The target down was 20555, right? All the way down there. And it just got that little bit and then she reversed. Anybody get pound New Zealand? A little bit, didn't go to target. Anybody in it? Okay, nobody's in it. We had two session recaps yesterday. One was the pound Aussie, right? So here's the pound Aussie, and the pound Aussie was the break to the downside right there. All right. Anybody trade pound Aussie down? It's going up now because we already changed it, but that was the move. Went about 85 pips. Anybody trade pound Aussie to the downside? Pound Aussie to the downside. All right, nobody in that one. And that's it because yep, that's it. All right. All right, that's all that went last night. As you saw, market went just dead. All right. If you traded something else, we'd like to see it. We don't count it. Feel free to post away. Thanks, Craig, as always. Tough night to trade. Tough night to trade. All right. Nobody traded anything. All right. That's all right. Moved on the announcement. Yeah. Well, we trade announcements, right, Scott? Just go down the 1 minute chart and you can trade it, right? As long as it's going the way it's supposed to. And it was structured yesterday, guys. We had it already down last night with the MACD going down, you can see. All right, where are we? Euro New Zealand, we've done. Pound New Zealand, we didn't do. All right. So pound New Zealand headed up. Do we have 55 pips left? We go to the target and look and see. Otherwise, there's no sense spending any time on it. 55 pips, we don't. So we don't have a trade here. Walk away because you'll need a break hook and go above this line, which doesn't give you 55 pips. Yeah, but it's 53, man. Isn't that good? No. Follow the rules. 55. 54 is not 55. 53 is not 55. You got to stick with the rule. You got to set the number. Why do we set that number at 55 pips? Because it's a fib correlation number for one, right? 55 pips right there, all right? Most currencies do 89 pips a day. Why? Because that's the fib sequence. You can look at the ATRs and see it, all right? The low ATRs are 55 pips, all right? Why do we have T30s in our chart? Because of the 34 fib, all right? Why do when they rock and roll, they go 144 to 233? Why did they do that? Because they follow the fib sequence. They follow the math. Indicator junkies don't follow the math, right? So 55 pips, got to have it, and we don't have it, right? 53, 54 is not 55. New Zealand yen trying to push down. This is a nice opportunity because it completes that the channel, and you have a descending wedge already in play for the downside move. Inside of a channel now. We're back inside the channel, so that's sweet, all right? Heart lines proved right in here, right in there, right in there, so I'm not going to change this. It was a false breakout, back in, and now we're looking for the trade to the downside. What do the Three Musketeers say? Three Musketeers say, we're trying to go down, we're trying to go down, we're trying to go down. We're going flat, now we're trying to go down, all right? So they're trying to go down, all right? So here we go, find the target. All right, so New Zealand yen, back to the ATR. So New Zealand yen, way down here. 58 pip ATR. Whoa, it's going to be tough to trade it if we even get it. All right, 1600 right there. We put a high in after that, and we're going down 58 pips, and we don't have a trade. You can see right away. You don't have 55 pips. All right, so there, 58 from up here. So you don't have a trade here, all right? All right, so there we go. We can't trade Aussie Swissy or Aussie New Zealand. Aussie Swissy has a 40 pip ATR, Aussie New Zealand 45. So that's in 24 hours, all right? So what's it doing? 15 pips a session. There are 3 major sessions. It's only doing 15 pips a session. I don't want in at something like that. Pound Swissy, all right? Pound Swissy trying to go up. We had it down yesterday, and we did get the breakout, and then it didn't go anywhere. All right, let's see if we have any room left first because we don't spend any time on something that's not going to give us a return here. The 5 o'clock candle is down here, 1600 right there. We put a low in after that. and we go up for 60 pips, 60 pips, and we're a buyer, and voila. Right to the pip, and then, oh, let's go to the next target. This is why when you hit your limit, the ATR, you move your stop, big candles, hold all of them for the next target. What did they do when they hit the next target? They exited, but they went to the next target. See, what you got to do is you've got to embrace the methodology that they're doing. If you're not embracing the methodology that they're doing, then what you're doing is you're trading against them, and they win. That means you're going to lose. All right. So you've got to get your head wrapped around it. All right. There are certain things you have to do. All right. Let's go look. GJ, there she is. Okay. All right. So now it's starting to show us what we remember we said one of these is wrong. All right. So now we go over and take a look and see how fast this does. This says, yeah, we're going down. Yeah, we're going down. We're going down. We were curling to go up here, but now it's slowed that mark down. We're going down. We're going down. We might go down. All right, there we go. So now we got plenty of time, right? So all we do, put slope support across this bottom right here. Oh, it's a little high. Hold on. And you can see you're in a breakout right now. All I'm doing is connecting that bottom to that wick right there. That shows me that. Don't try to include it. Why? Because you'll never see breakouts if you do that. All right, we're going to take this target, and what is it? It is 134 pips. So we're going to find the high now after 5 o'clock, which was right over here. This one right here just happened. And we're going down for, what did I say, 135 pips? I think so. 135, let me just check it. 134. 134 pips. We're a seller. There we go. Got to get us some fibs in that area. Take them off to the upside and do them to the downside. All right. I'm going to use the last piece. Swing high, swing low, swing high. All right. So I go get the fib extension key, swing high, swing low, swing high. There we go. Sure, JT. Look at that. The 1000 and the ATR are exactly the same. That's what's called confluence. Confluence is where you click multiple places in the chart, but you still keep coming up with the same area, same number. That's a contested area right there. All right. That's what that means. All right. So now we see the trade to the downside, and we're in a break. So we're going to go to the 10-minute chart as soon as we figure this out. All right. So there's the trade. All right. Trade 1 is here on the break, hook, and go. Trade 2 is the break of this bottom for the target, and then you hold for the 1270 below it right there. All right. So there we go. Pound yen is now down, which remember I was saying there's something wrong here. But you go with what the chart is until the chart says, oh, by the way, we're not doing that. All right, so let's go down to the 10. All right, so there's the break. All right, I need a hook. Okay, now this is a big candle. What is the setup on a big candle? Before you enter, let it center. All right, because there's too many participants to get all the way back to the slope support. So it's got to come, when that candle stops, it's got to go up halfway. When it goes up halfway, you can take your market order there. But if you're going to take a market order, you have to have the entry order in. The entry orders are below this bottom here at 186.19. So you put it in at 186.16, an even number. 186.16, looking for a target of 185.43. Remember, that's 2 lots in trade 2. Trade 1 is only 1/30 your lots, or one lot and 2. Always make sure you're in multiples of 3. All right. So, well, I'm trading minis now. Okay, I could do 3, 3, and 3. All right. I could do that. As you move up, your margin grows. You get your equity keeps bumping because you're now trading with way more than 5, 8, 10 pips. Your equity curve's going up, which means that your margin is greater, which gives you the opportunity to increase your lots, which allows you to grow your account. All right, watch for the bounce on the 382, and we'll see if we get a bounce up. We're looking for a market order after this half. And when this candle closes, it's got one more minute. I'm going to pop a fib from the swing high of the candle to the swing low. I'm going to find the 50%, which is halfway. Before you enter, let it center halfway. And I can put a sell limit on that line. All right, that means I don't even trade at all. I don't even look for a market order at all. Now, it's pushing down pretty hard, as you see, right? And UJ's moving down. Yeah, I'm up pretty good here. I'm up over 40 pips so far. Doing pretty nicely. All right, so there we go. And almost to the 619. That's a bounce point. See right there? Nice job. That was a blog post this morning. So, always check the blog in the morning and you'll be a heads up. I sent this out, hours ago, literally hours ago, right there. All right. Wait a second. Was that it? Well, that's wrong. That is it right there. I wonder why I don't have any of the pictures here. I don't know what's going on here. A little strange. Anyway, the ATR is 150.73 and the other target is 150.09. 150.73, 150.73 right there. 158.73. All right, watch for a little pullback here. Let me go move my stop to break even. Well, if you're up 40 pips, man, why don't you just take some profit? Because then I'm bailing on the trade. I don't do that. All I do is make sure I get some pips. All right, there we go. All right. We'll see what happens. EJ is underway. Anybody in EJ? Robin is. Anybody else in EJ? Thanks, Larry. I saw that. All right, so you got lots of traders in it. Okay. You say, I didn't hear you call a trade. I told you the parameters. It's your decision to make that. All right, so it's a live trade on EJ. All right, there we go. The downside, we'll catch it. Maybe we'll get it this morning and it'll go to target and that'll be great. All right, and we got GJ also. All right, anybody in GJ? All right. How can I trade that? Well, you can trade it with it. Remember, it's a pennant. You can trade it with an entry order. Daniel's in. GJ. Anybody else in GJ? Lars. Good. Anybody else? Sabitri. Okay, so that's a live trade also this morning. All right. Nice job, everybody. Way to go. So if you're in here, you go, well, you're going to call trades? We don't call trades. We show you the parameters. All right. And you got to set the whole trade up, including entry orders, all that sort of stuff. There we go. All right, so we got EJ and EGJ both to the downside as live trades. All right, let's go look at the Aussie yen now. All right, was that on the table? It was. So let's go see what it says. All right. Just starting. That's sweet. All right. So we need a bounce back up. All right. So if you missed the GJ and the EJ, and especially if you're a beginner, this is a beginner's currency. Why? Because when it moves nice and smooth. All right. Nice and smooth. All right. And when it pulls back, it doesn't pull back very far. All right. So your stop will usually hold. See? So it's a great beginner's currency. All right. We need a bounce. All right, we got the breakout. That gives us permission to go to 10. If you don't see it on the 60, the bankers don't see it either. All right, so now we got on the 10. All right, can we sell here? No, because we're selling at the bottom. One of the rules is I never sell at the bottom. I never buy at the top. All right, so if I took this trade right now, I would break a rule. That's why you need rules. Rules keep you from you. All right, need to reset the ATR and the AJ. Okay, thanks. Let me go up here to 60. Oh, you're right. There we go. We don't have 55 pips left. That's too bad. We only got 30. If we get a pullback up here, we probably will. Let's see if we get a pullback. All right, go down to the target. Up for 55 pips, and we won't get it. It'll come back up to here, but it won't get to there. So AJ's off the table. All right. AJ, you're here to cherry pick a trade, folks. You're not here to make a bunch of trades. All right. Making a bunch of trades is a recipe for disaster. All right. All right. So a great trader is trading at about 72%. A great trader. A bank trader minimum is 65%. What is our minimum? 65%. I got to trade at 65% win ratio. That means I lose 35 out of 100 trades. Get that through your head. Well, how do you make money? Because we don't trade for 5, 8, 10 pips. Our average pip capture is over 35. All right. Wow. All right. No, you move once you plan it, you can walk away, Erica. All right. You can walk away once it's planned, as long as you got a way to move your stops. So what you want to do, Erica, is you want to get once the trade goes to break even, all right, and you can get trade one to break even, you can move your stop. Now you can now you got to figure out how many times the stop has got to move in order to get to the target. All right. So, in this example right here, we got this looks like 37 to 10. We only got 27 pips left. All right. So if it pulls back up here, all right, and you're gonna have to have the stop move one to here and then down to here, which means 27 pips. So you're gonna have to, when you get the trade up in here, and you get it to break even, you put a 27 pips trailing stop on it, and when it moves to stop, when you hit target. See, it's not about what most traders do is they put a 15 pip trailing stop on. Well, what's their problem? They want 15 pips. They don't want 55. They don't want 105. They want 15. All right, so they have automatically set themselves up for failure. All right. So it's not just it's not easy. The stops are the trickiest thing, all right? Especially when you have multiple orders on. So when you get 2 or 3 trades on, all right, you have got a job because you're moving stops on 2 or 3 positions and you got to figure each one of them out. All right. And it's not a 15 pip stops, whatever it is to make it, how many times it got to move to be right on this number when I hit it. So that if it's done, I get it all. But if it goes, I move my stop and I'm going down to the next one, and 27 pips later it'll move. See? All right. So there you go. That's how you do it. All right. Now, you don't get to that right away. All right. So at first you're watching because that's how you learn. All right. At first you're watching those trades all the way to target. But eventually you go, okay, I know how to do this now. Today I got to have that stop move 3 times because I got a big area. It's got to move 40 pips at a whack for 120 pips. All right. So I put a 40 pip trailing stop on it. All right. And every 40 pips, it moves the stop, protects 40 pips and is in position for the next 40. And if I got 120 pips target, I want it just as I hit there for it to go 40 pips and move my stop. And maybe I get stopped out with all that profit, but maybe it keeps blowing on through and I get another 40 pips. All right. So we major in risk. We never major in reward. All right. And so the other thing is that we never make an entry unless we know the exit. Dumb money finds an entry and then starts looking for an exit. We find an exit and then we start looking for an entry. All right. Now, we're trying to figure out what the big boys are trying to do today. And as you can see, the big boys are trying to go down. All right. I can't touch this unless I get a pullback. All right. So AJ with a pullback, I can do it, but not until then. NJ, you're going to go with the yen's growing. There we go. Do we have 55 pips left? We do not. All right. So we don't have 55 pips left on NJ. All right. Now, would we, if we get a pullback up here, let's check that because that may bring it back into play if we get a pullback. All right. So we go down there, we go up for 55 pips. It's all the way up here. There's no trade. All right. We want it to come back here and then go, but there's no trade there because it's not 55 pips. All right. Remember, if there's not 55 pips, a banker can't make the trade. All right. He can't. All right. Now, he made the trade up here. So this is trade 2 for him. This is trade 1 was he makes the market. This is trade 2. This is also the follow through coming in right up in here. The follow through came in there. Follow through came in there. They got 55 pips. And they're not clicking out for 510. All right. They'll get fired if they do that. All right. Boss, I had a good feeling about this. Yeah, but you risked $20 million of our money to make 10 pips. Get the heck out of the office. We can't have crazy people like you in here. Got to break this bottom. This is a good place for it to bounce, but it's got to go too high for us to trade it. So we're going to walk away from it. There we go. So well, why don't you change the channel? Because the heart line is proven. See, they've proven the heart line right in here. All right. Well, I'm on MT4. I don't have a heart line. That's right. So you can't make that decision. All right. You can't. You got to guess. And guessing doesn't work in trading. All right. You got to know. Got to know that you know that you know. All right. How many channels I got to do? 300 of them. Finding the heart line. 300, making sure that they found the heart line. You do 300, your left brain will see it. Your left brain will know where to put it. All right. If you don't do 300, it won't. But what if I do 270? I said 300. And that's not me talking. That's neuroscientists. Neuroscientists tell you that you need 300 images of anything you're studying. All right. So you got to do them. So you know the statistical probability. If you don't know the statistical probability, you're not a trader, you're a gambler. All right. So don't be a gambler, become a trader. Understand all the mechanics that have to go along. That's why you can't learn it in 3 weeks. All right. But you can learn it because there's no rocket science here. There's none. Anybody with average intelligence who will follow the rules can be successful. And you can be world class in 100 hours on one or two things. In 100 hours, you could be world class on trading polls. All right. Wow. Do I want to do that? Well, yeah, the market likes to do polls. Yeah, it likes to do polls. It likes to do polls. It likes to do polls. Wow. I guess so. What else did it like to do? Pullbacks, pullbacks, pullbacks. If I could become a world-class pullback trader and a world-class poll trader, guess what? I can earn while I learn. It doesn't matter if it takes me 3 months, 3 years, 30 years to learn all the rest of the stuff. I can be profitable now. I can be sustainable. I can trade at 65% if I'll wait for my trade to come to me. But that's not what traders do. They just want to push the button because they want the endorphin high. Don't push the button. Wait for your trade to come to you. All right. What else we got? We got Euro New Zealand. Let's see that. All right. And ooh, look at that. Starting to, so we remember, this pattern says up. Well, we're right in the middle of this. You can see equilibrium running right here. All right. See, equilibrium is running right there. That's equilibrium for the range. They can do this or they can do that. All right. So as you can see, there's pressure now pushing it down. You're below the zero line break, so you are officially a seller. All right. Now, if we get the break, not until we get the break, but if we get the break to the downside, all right, we'll have to figure this all out. Can we do that now? Yeah, we can do that now. All right. So pop it up, the ATR, because I got to know where the target is. All right. Never make an entry unless you know the exit. The target is 125 pips away from the New York fix high or low. All right. So I go find the New York fix, which is right, where is it? 1600, right in there, right there. We put this high in right here. We take that and we're going down for 125 pips, 125. And there we go. And there's the trade right there. All right. So it is trying to break out. All right. So at some point here, well, after the breakout, we'll take the up stuff off. All right. But we can already figure the trade out. All right. Let's go look at the Three Musketeers. All right. Three Musketeers say we are going sideways. All right. No, we're trying to push it down. The order flow is down. We're trying to push it down. The order flow is down. Order flows down. Order flows down. Order flows down. All right. What's the chart say? We're going down. Get rid of the upside stuff. Remember, I told you I wouldn't like this one at all. Because it was not doing what it's supposed to do. Now it's doing what it statistically does. All right. I can trade this with entry orders. All right. So the trade is right here. We're going to hold to the 1.618 below the ATR. All right. I can put in a trade right now below that bottom and make this trade 1 and then this trade 2. All right. I can do that. Now, what happens if it comes in like this, comes down here, doesn't take my entry order and pops back up? I can take a market order there, leave the entry order in here, leave the entry order in here. And if it goes to target, I will make 250 pips today. Wow. How do you make 250 pips? Because trade 2 is 2 lots. And to the target is 70 pips. So that's 140 pips right there in trade 2, not counting trade 1. And if trade 1 goes from here down to there, it's going to make 100 pips. So now I got 240 pips. Right. So there it is. You're in New Zealand to the downside now. Well, yeah, but you had it up a while ago. That's why you have to watch the charts, and that's why you constantly go back on them. Let's go check and see if the dollar has changed direction. It is now really trying to tell you we're going down. MACD says we're going down. Now, if that's the case, that means that pound yen and euro yen will stop to the downside and will go up. So if it breaks that bottom, watch out. So what do I need to do here? You need to, if you're in these live trades, you need to get to break even. All right. Well, why don't you just take that off? Am I going to get to 35 pips by taking that 12 off? No, I'm going to hurt my average. Yeah, but you got 12 more pips than you had before. All right. That's not trading. That's gambling. That's retail money mindset. Don't be a retail money mindset guy. Learn to trade like the bankers. They're watching that dollar index like a hawk. All right. Well, so we'll see. Yeah. So if we put a line across here, right there, she's pushing it right now. A breakthrough there. We're going down, folks. We are going down. I can get rid of this range now. We're out of that range. All right, there we go. So we got a double top in place. Is that enough? Okay, so what do you ever do? Every time you're going to trade a reversal, you got to make sure they got the money out. The money came in here on non-farm payroll and the money came in here. All right, so it's got to come out twice. The buys got to come out twice. So how does that work? All right, this money came out right there. This money is coming out right here. If they break that line, they got all the buys out, and that means they have all this money they had in the buy is now fully into the sell. See that? Yeah, lately they have been, Daniel. And then they flip, and all of a sudden dollar yen goes with the dollar, and it all depends on the economy behind all that. And we don't want to learn all that because then we can't trade. We can't trade after that. Because there are too many factors that say, no, don't do it. No, yes, no, don't do that. Yeah, no. And now you can't trade because you're overwhelmed with information. In fact, the CIA did a study on it, and they found out that most of their analysts trying to find spies use very little information. Once they have enough information to make the decision, adding in additional information only complicated it and made them overconfident, and they missed the deal. That's from the CIA. And they're in the business of finding spies. So simplify, simplify, simplify. Keep the pertinent data on your charts. That's all you care about. What's absolutely necessary. Not everything. All right. All right. Pound dollar. No, there's not 55 pips left. So, get away from it. Nothing there. All right. Let's check that dollar yen. I get rid of this for now. Ooh, there we go. Dollar yen. Okay. So we had it up. So what's it telling you? Yep, we're going down. Remember, I told you this is a little leery if they think the dollar's going up, but it's structured to do that. But if the dollar goes down, it's not going to happen. So I get rid of that, and I get rid of this to the upside. Remove. I get rid of this to the upside. All right. I already have the fibs. You see they're proven. Yeah, we know where they are. So I'm not going to mess with these because they're always showing you. Yeah, we know right where it is. All right. This is one heck of a line right there. I'm going to take it off now because it's not in play, but it was back here. And you can see we got to break this bottom right here, which is what they're trying to break right now. All right. So break, hook, and go. Where are we going to trade to? All right. Find the target. All right. Go pull up the ATR, and pound dollar yen has an ATR of 121 pips. Find the 5 o'clock candle from yesterday, 1600. We put a high in after that. That's this candle right here, 4 candles ago. We go down for 121 pips, 121, and we're a seller, and there's a target. Do we have 55 pips left? We go down to the target and go see if we have 55. Why do you think that is programmed there to be 55? All right, we have 55 pips. All right, so we need a pullback here. All right, now I'd like to get some fibs on down there. So I'm going to see if I can from this swing high to this swing low to this swing high. Not much in that area. All right, but it is. All right, so remember, you only move a stop if you have a mathematical reason to do so. Is the T30 a mathematical reason to do so? Yeah, it's a 34 fib. All right, from the so yes, it is. All right, so I could move it there and at the 1.618. All right, now I need a pullback. Once I get the pullback right here, once I get the pullback, here's the support. So that's the trade right there. We'll hold to the 2.618 below the ATR. All right, I got to get a pullback up in here. Once I get a pullback up here, this becomes trade 1 right there, and this becomes trade 2 right there, holding to the target. Dollar yen to the downside now. Finally getting some confirmation from the charts. And this is another reason why you're not in a hurry to jump in a chart. Why do I want to get in a trade? Do I know what the dollar index is doing? I guarantee you 90% of retail traders don't even look at the dollar index. Why? Well, because there's not one on their charts. Why? Because the broker doesn't want to give it to you because there's an extra data feed for it. We know that. We pay it every month for our traders. We don't like paying it either, but we have to because we can't trade without the dollar index. Let me look at it. All right, EJ, let me go over here. So if in the AJ, would you give position 2 room to breathe? All right. Well, if position 2 is already in, you're in to breathe. All right. If it's not, all right, you don't give it any room to breathe. All right. Especially now. What you always want, Stephen, is the pullback to be behind you. All right. So this move right here to the downside, the pullback was behind me. So bankers took it. This room here, the pullback was behind me. So bankers took it. We're in a pullback. All right. That's what we're in. If we get a turn, the pullback is behind me. See that? If the pullback's not behind you, it's in your future, right? So there you go. All right. So let's see. I only got to pop a fib on here from the swing high to the swing low right there. And there's the 382. Now, if I was at the 214, I could not make this trade. And the reason I can't make that trade is there's no reward for risk. But at the 382, I can do that. All right. You say, well, how do you know that? Because you got to know the math. You have to know the statistics. All right. A pullback to the 214, the next target is the 270. You got to risk 1 for 0.62. It's less than a 1-to-1 risk to reward ratio. You can't trade it. All right. At the 382, it's 1 for 1.06, greater than a 1-to-1 risk to ratio. And of course, all the rest of them are much bigger. All right. So why is that? That's because my stop is going to have to go above the 786. All right. So if you look at it this way, at the 214, my reward is the 270. Yeah, the target's down here, but I can't prove it's going to get there. I can only prove the next target. Here's my risk above the 786. You can see that the risk is greater than the reward. I can't make that trade. But at the 382, there's my potential reward, and there's my risk. So you see, the risk is smaller than the reward. The decision to make a trade has nothing to do with your trade setup. The decision to make a trade is, do I have reward for risk with this trade setup? All right. And that means I got to know where I'm at. I'm at the 214. I got my trade setup. Do I take it? No. I'm at the 382. I get my trade setup. Do I take it? Yes. See? All right. Thanks, Larry. Yeah, Larry's got it. To the pip to the 1,000. Look at that. See that? On the EJ. Where did it bounce? The 1,000. Remember, that's why we got to find the 1,000. It's a bounce point, number one. It may never break through there, and that may be all you get. And you've got to move your stop when you hit a 1,000 and make sure you don't lose any money. Well, how do I know where that is? I got to know where the 1,000 is in order to do that. Yeah, it's okay. It's where you grab them. So you grab this bigger one here. I'll go ahead and do it. Smaller one. Oh, I got you. Yeah, right there. 1,000. Right there to the 1,000. All right, watch the turn. All right. Now, if I get a turn here, what's the turn? Close in reverse. All right. If I get a turn here, I got to make this decision quick because I'm headed to the 214 and I don't have risk for reward. All right. So, well, what if you take the trade here and it goes to the 50? Well, the difference between it's 7 pips difference. Whoopie-doo. 7 big old pips. That's all. All right. So this will be entered ready when it closes. All right. And it just barely started. Oh, there's the candle. Just barely started. So we got it. Let me take it down a little lower. I'm not trading off here. I just want to show it to you. All right. See there? We're headed down. All right. So any pullback up here, you're good. Now remember, it's 1.106. I can't trade it to 214. The closer to this 382, the better I'm at because it's a 1.06. So I got a little fudge factor here. All right. See that 1.06. So I got that little 06 fudge factor right there. All right. If I lose that up here, where I trade it too low, I lose that fudge factor. And I no longer can make the trade. And as of right now, I can't make the trade. I had to get it up there to 382. All right. So now my only hope is it goes back up there. All right. Now, if you're in the trade, this is a place you add a position. You make a business decision based on your margin. Hey, I can add a trade here. All right. I got two lots coming in down here, but I can add a trade here. I got one up here. Could I? And it can't lose because I got it at break even now. What can I do? If I decide I want to take that trade, I can leave my entry order in for down here, and I can grab this one. Now I got this one, and this one. See? All right. As the trade matures, it may give you more opportunities. All right. So there you go. Got to close in reverse. What does that mean? They exited the buy into the sell. Well, why did they buy? Because they had to manipulate the market, just like they had to manipulate the market back here, right here. It's like they had to manipulate the market here. How they do it? A, B, C. Here they do it. A, B, C. Right? It's all manipulated. A, B, C. Right there. Manipulated to make that happen. Traders who know what they're doing, follow that information. All right. You got to become, as Jerry calls you, a chartiologist. A chartiologist. Yeah. AJ pulled back. Oh, did it? Oh, thanks. Go over there and see. There we go. Nice. All right. So I've already got a breakout here, so I can go to the 10. There I have the pullback. So I got a break and a hook and a go right there. I'm in a second break and a hook. All right. As you can see, I'm at support, doing a close in reverse. What should I do with this? All right. Do I have room? Let's see. 55 pips to the target. Let's see if I got it. I don't have it. See? Unfortunately, too bad. I don't have 55 pips. Be sweet. But you can still go to school and learn from this. All right. You can still learn from this. How did they make everybody do this? Okay. So they did A, B, C, a 5-wave mini structure to the upside. Then they started putting in lower highs, pull back, lower high, pull back, lower high, close in reverse, close in reverse, close in reverse for the continuation. That's how they did it. I can now put a channel on because I got the angle. I go down here, heart line proved, heart line proved. There you go, all done. All right. Can't trade it, unfortunately. All right. Well, interesting morning so far. Dollar yen, you're going to go. There she goes. All right. All right, got a pullback. All right. I'm at the 214. That's what I got to find out. If I'm at the 214, I can't make the trade. Click from the swing high to swing low, the leg right there. And where am I? Right there's the 382. I'm at the 214. I can't make this trade now. But when I hit the 382, I could have made it for trade 1, trade 2. Now, you got trade 2 in here, right down here. If you're going to trade it, all right, do I have 55 pips left? Go to the target, go up for 55 pips. And I do. All right. So, didn't want to do that. Find that target again. ATR on dollar yen 121. Oh, gonna go up to a 60. 1600. Right there. Put a high in there. Okay, there we go. 100 and what did I say? 121. 121. All right. So I got to get a pullback. I can't sell here. Why? Because I'm selling at the bottom. That's why we wait for a break hook and go. The hook gives you the new top. All right. We broke the 214. All right. I can't trade it at 214. All right. I can't. I got to break a rule. It has to come back up. But if it comes back up, and as it's going back up to the 382, I can then put my trade in, my second trade right there, holding for the 2.618 and this 1270 now. Get the pull back up to the 382, and there is trade 1, and there's trade 2. All right, so I got to get a pullback because I can't put the entry order in now, or it may tag it in there. All right, see that? All right, here we go. GJ, how you doing? All right. There she goes. All right. Well, second trade coming in very shortly here. They got to get this moving, folks, because they only have 11 minutes until the 11 o'clock bump. If you don't know what the 11 o'clock bump is, it's when the barrier options expire. We looked at the plain vanilla options earlier. The barrier options are usually on even numbers, all right, and 50 numbers. That's where they're normally on. All right, they expire in 11 minutes. All right. So they got 11 minutes. The traders who got options to the downside are trying to run it to the downside. Traders who got options up are trying to keep it from going down, because the further down it goes, the harder it's going to be to go up to their option. It's just a battle, right? And eventually one of them wins. When one of them wins, the other one just joins them. That's what happens. Now they know they're not going to get their option contract, so fine. We'll make our money today in the spot. So sweet. There's a beautiful close in reverse right there. All right, where do I move my stop? At the 618. Where's the next place I move my stop? At that T30 right there, just before it hits that ATR. So two places to move your stop, one here and one here. That's all you got. All right? Mathematical reason to do so. If I don't have a mathematical reason to do so, I don't move my stop. Why? Because these are uncontested areas. Uncontested areas. You move your stop too close, they're still in there trying to get it going. They stop you out and go to target. All right. That's what they're going to do. How do I know that? I've been trading 23 years. That's how I know that. This explained it pretty well here. Let me get it. I can't seem to find it. Hold on. I'll be with you in just a second. Here we go. Found it. All right. A small bright red candle compared to a big dark red candle. During the small bright red candle, they were overcoming a big resistance or barrier, and it took a lot of money to produce a small movement, but it was a very significant movement. The big dark red candle, it produced a lot of movement, but it was in an uncontested area, so a lot less money was enough to produce a lot bigger movement. A big candle with bright color means a lot of money coming in, all right? So big candle, bright color, a lot of money coming in. All right. Now, they can't get back up here to hook. Why? Because there are too many participants already in the market. All right. So they get one little pullback. That's all they got. And that was your shot. And down you go. There you go. All right. So good job. Yeah, Abdul, would you do that? Oh, so Abdul trades XAU every day, which is gold. All right. So let me pull it up here. Oh, get the right chart. So area. So there's gold. All right. 94, 62, 32 for 168 pips still in. All right. And for the additional 60 times 3 plus another limit order for 30 pips right there. So we can't trade gold in the United States anymore because we can't do it with leverage. But if you live across the pond, you can. All right. So Abdul is our gold master. He trades them like crazy. Only 168 pips. That's too bad. Gee, I feel so bad for you, Abdul. You only made 168 pips today. Goodness gracious, that all? There we go. All right, well, we're here at the dollar. We'll look at it here. We have not broken through yet, as you can see. So everybody's still tentative. All right, there's no clear line to the downside yet, although it looks like it. Lower highs, bears got it, MACD pointing down. It's not going to be proven to a break slope support. Yeah, you missed your usual 600 to 700. I know. But as always, good job. Notice Abdul, how did he make all those all the 168 pips? He pressed his winners. He didn't trade for 5, 8, 10 pips. All right, Yo Yen keeps moving our way, so that's great. Keep on going, baby. All right, pound yen still moving, pushing on through right now, as you can see right there. About to get the second trade on here pretty soon. All right, if it pushes through that support, we're in good shape. All right. Doing pretty good right now. I'm up 44. Robin, how are you doing on the EJ? So not too shabby. All right, now you got to be careful here. If this goes fast, it's going to slam into the channel first. So we actually want it to break and then slow down so it gets to this target, not this target, right? See that? But if it goes fast, you're in charge of saying, okay, I'm going to move my stop tight here. Yes, my target is down here, but the risk has changed because of where I'm at. Okay, Robin's up 52 and 34. Nice job. Way to go. Two positions on. Second position has two lots in it. So that's 68 pips plus 52. Robin's over 100 pips. And the trade's just started. It's just started. All right. So if you're new in here, you're probably going, man, I've never seen trading like this. This is crazy. It is different. All right. But we don't scalp. I was a great scalper. In fact, I trained people all over the world. I was a world-class scalper, and I was in demand all over the world. I traveled all over the world teaching people how to scalp. And one day I did 78 trades in a row without a loss. 78 in a row without a loss. And these were we didn't have micros and minis those days. We only had standard accounts. All right. And I looked at how many pips I made trading for 5-8 pips. And then I said, how much did I risk? And I was scared spitless. I was like, oh my gosh, I risked $30,000 to make $3,000 or something like that. And I recognized right away that it was not sustainable. I was working for a company at the time, and I went to the company and said, you can't teach people this. All right, they're not going to make money. And they said, no, we get a kickback from the broker of 1 pip every time they make a trade. So the more trades they make, the more money we make. We're not stopping. We want them to do scalping. I said, good, then you're doing it without me. And I walked away. Now I was totally on my own, had to start all over again. All right. Best decision I ever made. But yeah, Erica, I'm glad you brought that up. So let's see if the pushes. I want to show you something to prove why you got to do it. Okay, we are breaking on both of them, so just be careful of that. All right, we're already in. If you're in trade, you can still make this trade here on GJ because you got over 55 pips. So if you get a break, hook and go here, trade 2 is now down here, and trade 1 is here. So the entry order would be at 185.88 with 2 lots there. And when you get a break, hook and go here, you can take that trade with a market order, or you can put an entry order below this bottom down here at 186.16 for entry order for trade 1 and trade 2. All right. So you got 75.80 pips there. So there we go. All right. Let's see what happens. Let me pull this up and prove to you exactly why you can't make it if you scalp. All right. I'm going to prove it to you. Give me a second. There we go. Where are you? Hold on. In a different folder. Well, where are you? Let me just pull it up this way and see if I can get it. It's an Excel spreadsheet, so. Here we go. All right. So this is a spreadsheet that we developed to illustrate this point. All right. So, it's based on all things being equal, which are not, but as you know. All right. So let me go here, get my thing, change the color to blue. Okay, there we go. All right. So you can see the spreadsheet's based on 30 pip stops. Okay. Anyway, 30 pip stops, and that's an average. Every trade stands on its own. This one might need 27, the next one might need 42. It's whatever the chart says you need, but on average about 30 pips. When I was with FXDD, I was in the pits one day and I asked the guys up there, I said, what does the average retail trader make? What does he make? And he said they average 5 to 8 pips. All right. Now, if you're risking 30 pips to make 5, you cannot be successful unless you can trade at 90%. You have to win 9 out of 10 trades. If you lose 11 trades, the 11th trade takes away all your wins. All right. So you can see that's not sustainable. You can't trade for 5 to 8 pips. All right. You can't do it. All right. So now let's just change this to be a 1-to-1 risk to reward ratio. We're going to risk 30 pips to make 30 pips. Okay. Now things change dramatically. At 50%, I lose 50 out of 100 trades, I break even, all things being equal, which they're not. All right. So if I could increase my skill level from 50% right to 51% right, I would have numbers in here. I would have an increase in my margin account. Well, as you know, we don't ever trade for 30 pips. We only trade for 55 pips or more. So at 55 pips, things change dramatically. All right. At 55 pips, I only have to be 40% right. In other words, what you want to do is stack the deck where you don't have to be the greatest trader on the planet. All right. And then work on your skill level. So if I could trade at 40% because my trades are 55 pips or more, all right, I can make money. Not a lot. But look what happens when I increase my skill level just to 50%. My pip capture goes up to $125 from 40 on a mini. What does that mean? I have a 300% increase in my pip capture. All right. So you can't do it. You can't do it. And yeah, it's terrible. All right. Now, you can't do it. But there is something that I'll prove it to you because it's been done in real life. All right. So in real life, there was a broker called Forex Broker. Forex Broker did a contest, a trading contest. And some guy won it. At the end of it, they took a look at all the losing accounts. And the losing accounts got the trade right 64% of the time. They were right 40%, 64% of the time. Yeah, exactly, Jerry. But they all lost money because they were scalping 5 to 8 pips. Their average pip capture was only 5.7 pips. Now, all the winning accounts with one guy on top of it, they were slightly better at finding a winning trade, 6% better at finding a winning trade. But they all made money because their average pip capture was 36.543 pips. All right. The numbers don't lie. You can't be successful trying to pick off 5, 8, 10 pips. You have stacked the deck against you. Yeah, I made money today. I'm a winner. Yeah, you're a winner today. You won the battle, but you just lost the war. You now got to be right 90% of the time for the rest of your life. Now, the only way you can do that is if you are the greatest trader on the planet. Are you the greatest trader on the planet? If the answer is no, then you cannot do it. You cannot do it. All right, we're seeing if this GJ will break. It's sure having trouble, but we do have a break and a hook right now. So watch for the go. Watch for the go. All right, the first candle went hooked down. This one hooked back up to the support. So it's enter when ready. All right. Am I in a hurry to jump in this? No. Is there a lot happening? Every time you see that thing bounce, that's an order coming in. How big is that? It's at least $1 million because the minimum trade on the interbank market is $1 million. All right, let's look at the EJ again. It's hanging out also. Everything's stalling out here. See, stalling out. What's the UJ doing? And it is not come back up. We need it to come back up. Get down here in a 10. Oh, it did come back up. But did it get? Yeah, look at that. Where did that go? See the 382? When they hit that 382, that's where the money came in. Do you see the wick? Right there. I'll make it big so you can see it. Wick to the 382, and instantly they found sellers. Why? Because bankers trade with entry orders. All right. 85% of your trade should be entry orders. Should be entry orders. Thanks, Chris. 168, 186.18. Now, don't forget that previous support or resistance is only important if we're trending, Chris. All right. So when we're ranging, they're trading fibs. When they're trending, they're trading previous support or resistance. So if we bring previous support or resistance into a range, we have complicated the situation. All right. So just a heads up, be aware of that. All right. Now, you can also see right here that they may be doing signs of starting a flag pattern. All right. Now, if that's the case, all right, we want to bring our stop on trade 1 right above the 382 where the wick is, and move your stop to there. What if it breaks out and pops up there? Then I get stopped out, but I get stopped out with profit. All right. But I'm still in if it breaks to the downside. Major in risk. All right. So here's what traders don't do. They get in a trade and they don't figure out where the bail zone is. All right. So for instance, I talk to traders all the time. And I'm talking with them, and I go, they'll say, "Hey, man, I'm in this dollar yen to the downside. It's awesome. I'm going to make so many pips." I go, "Good. What are you going to do if it doesn't work?" And I get this blank stare on their face. What do you mean if it doesn't work? Right? They don't have a plan for the risk. How do I find a plan? You draw a line across these tops right here. And if you break that line to the upside, I'm out of here. I'll give you that much breathing room to make the turn to the downside if you don't find it. But if you break that by 1 pip, I'm out of here. All right. That's the bailout zone. All right. Kind of like this, you go out, if you've ever driven in the mountains, you got, you've got a big mountain coming down here like this, and there'll be a sign up that says truck runaway zone. So you're in a truck like this going down and headed down, and you lose your brakes. All right. So rather than take you all the way here, gathering speed and slam into cars, they build a ramp like this against the gravity. So it's a bailout zone. He can go right like this, and gravity stops him. It's all sand and stuff, which slows him down. And he lives and he doesn't crash. It's a bailout zone. Things aren't working. Where do I bail? All right. So there you go. This is where I bail on the EJ. You break that line over to the dollar yen, over to the EJ. Where's the bailout zone? They're down here in a 10-minute chart. We draw a line off the tops right here, right there. And you can breathe in here anything you want, but you break that line by 1 pip, I'm out. All right. Same thing with the GJ. All right. Bailout zone, one of the most important things. I can't even get one on here right now. So right now it is this one right here, which is a lot of risk. That's about 60 pips. All right. So it's not that big, 45 pips. All right. So I can't get one on here. The only one I got is this right here. Now, if they pop a little one up here and then turn, then I'll be able to get a new bailout zone. All right. So there we go. What are we seeing? Big hard stop here. See how hard that support is? That's one mamma jamma right there, folks. Wow. So, all right, everybody enjoying themselves this morning? We learned some things this morning. That was a question. Yep. Anybody else? You want to talk, Jerry? Well, I'll get my headphone on. Speak, oh wise one.
Oh man, I'm just enjoying the lessons myself. They're always refreshed to go back through them. So, Abdul, you should have a screenshot that I sent you. You need to look at that. Everybody else, man, I'm glad you came. And there's a lot of them that joined when we went live, Scott. So we gained a bunch that are here that jumped in from the YouTube side. So we want to do that. We want to look at getting Facebook plugged in there too. So, this is life-changing potential. I think Erica's one that can tell you that. She's been successful trying to scalp, and it'll make your brain fry. I mean, it's too stressful. Trading can be stressful and it can be wearing on you, but it doesn't have to be. What we're trying to do is teach people how to. It's like Scott said, in the early days, do you know how bad it was that we tried to trade the news with nanoseconds of time, and the stress was insane. We used to connect to servers and paid for services where people they were tied into the T1 backbones and for servers, and you had to, it was a split second trade. That's not the reality of trading. Not for us. That's not a retail trade. That's not you sitting at home learning to trade. Sitting on the beach somewhere learning to trade. This can be a very enjoyable process. It's hard and it takes focus. I think Ed, you're in here. You've done this a long time with us too. You've come and gone and grown and all that kind of stuff. So it's great to see you in here, my friend.
The grumpy chef.
Brain.
The grumpy chef is here.
That's right. You can, man, I love Ed, man. Ed is awesome. And he's a hard worker at this. This does not come easy. No education that you ever get comes without cost. Nothing of value is free. Nothing of true worth is free. That's both secular and that's biblical. It should cost you something. It costs you your time and your focus and a dedication to it. But we promise you this, if you'll stick with it, you'll learn enough that you can stand on your own. And we're teaching you how to fish. We're not giving you a fish. We're teaching you how to fish. And that's our goal. I promise you, that's our goal. So I want you all to know that. There is, that's right. There is no reality in something for nothing, Larry. You're right. I appreciate every one of you. I appreciate every one of you. And if you think that's not true, stick around and find out that we're not lying. We care about you. We care about how you do, where you end up. We care about your success, but I care about your failures too. You're not going to win without losing. You're not 100% winners. We lose. Part of the two-step is one step forward or two steps forward and one step back. We just have to get it together. We join hands and we go through this together. Come back for the training. It's bring a friend. Tell somebody you know. Tomorrow we should have twice as many people. It's open. It's open. You can give the links away. Tell people to come see us. Come sit in on this. It's training you've never seen before. Y'all have a blessed day.
Thanks, Jerry. So just as a caveat that you can become world class in 100 hours. Okay, they've done a study on it like this, and you get down here. Wait a second. Yeah, what a pain. Create an account. I don't want to do that. So let's find somebody who's got one open here. Oh, they took that down. Hold on. Well, I saved it off. Let me do it this way. I do it with a PDF here. All right, just took a screenshot of the whole page. All right, so they won't let me in. So there we go. Same thing. All right, so what is it? How does it work? Okay, here's the formula. All right. Deliberate practice, skill selection, times 100 hours equals world-class skill. All right. Now, the market does two things every day. It pulls back and it does flags. All right. The number one thing is to start with flags. All right. They're very slow to develop and they're very calm. All right. So if I did 100, if I did 300 flags and the skill selection was flags and I worked on it for 100 hours, I would have world-class skill in something the market does every day. If I would do 300 pullbacks, all right, deliberate practice of 300 times skill selection times 100 hours, I could be world-class skill in trading pullbacks. Well, why is that important? Because the market does pullbacks. The market does flags, pullbacks, flags. All right, that's what it does. Flags, pullbacks. All right, that's what it does every day. And if I would devote 100 hours, not to trading, to becoming world class in something, if I were to do that, all right, and practice and do, obviously you got to have the right methodology. So trying to be I was a world class trader in scalping. I was a world class trader, but it wasn't going to work. It can't work. The math doesn't work. All right. The talent code there. Thanks, Joe. Yeah, Ed, thank you. So there's a book you could read about it. All right. So you need to become world class in something, right? Something. All right. Since the market does flags and the market does pullbacks, that's where you start. You don't need a Gartley. You don't need a bat. You don't need all that sort of stuff. You don't need to be trading reversals. You need to be trading pullbacks and poles. Once you learn that, you're now sustainable. I can earn money every day. I have no cost. I mean, I make a lot of money, but if I have no cost, how long can I take to learn? As long as I have no cost. It doesn't matter whether it's 3 weeks, 3 months, 3 years. All right. Now, my opinion is anybody with average intelligence can do this. Anybody with average intelligence can do that. All right. Erica, we had a guy, Harold Miller. All of us know all the old boys in here and girls know that. Harold was 91 years old, still trading. I met him in 1995, and he'd been with us since no 2005, since 2005, and he'd been trading with us from that time on. And 91 years old, was still trading. Crazy. He did pass away in COVID, unfortunately, but. So we miss him tremendously. He was a wise man. What, 100 hours? Think about it. Are you willing to invest 100 hours of your time to become world class? All right. Yeah, I'd be willing to do that. All right. So there's the opportunity. We haven't broken yet. Pound, euro yen, we're up in this trade. We're all up in both trades, but they're probably not going to go to target this morning. Is that normal? It's absolutely normal. Now, if you're coming from a retail world of 5 to 8 pips, you're going, why aren't you out of this trade? Well, because we committed to the trade, and because we've done thousands of them, we know that a sideways movement here is solely to keep it in play so they can go down. There you go. So Beatrice is 89 and trying to learn. There you go. Fantastic. See that? So one of the benefits, most of the people in here are, older people. We have young people here, but most are older. All right. One of the things you got to do as you get older is to keep your mind at work. Your mind's got to be sharp, or else you go down fast. Well, trading will keep it sharp. That's for sure. Or help keep it sharp, I should say. Not much happening here. So let's do a session recap here. And here we go. All right, this is a session recap for the 6th day of February. And this morning we were watching as the dollar index appears to have topped out. We only have to come out twice, and they've already done that. They put the money in twice, so they only have to come out twice. We're looking for a break of slope support here. MACD is showing you that's what they're trying to do. They just haven't been successful yet. So we're going with dollar weakness right now, all right? So dollar weakness means the euro should now go to the upside. And as you can see, it's not doing anything here, all right? Let me get rid of this to the downside and this to the upside. There we go. Sorry, they put that back on. All right, euro dollar ATR is 69 pips. All right. So I go from the 5 o'clock candle yesterday, right there. I got a low after that. That's the low for the day. Where's the high for the day? That's the ATR every day. And you know it ahead of time. One day before it happens, you know it. 69 pip ATR up, and it should end up here by 5 o'clock tonight. There it is. We don't have 55 pips. Target is 167.90 up there. Pound dollar. Pound dollar underway, trying to go up here. We only got about 35 pips left here. The target is at 26.23, and pound dollar has an ATR of 89 pips, which is also a fib sequence number. All right. All right. Dollar Swissy. All right. Here we go. Dollar Swissy. Now it follows the dollar index. So when the dollar was going up last night, we had it up. It's now flipping. All right. So it follows the dollar index. Once it breaks there after 5 o'clock, you'll get a new ATR. If the dollar breaks to the downside, currently the ATR is only 69 pips, and it'll probably be less tonight because we didn't hit target today. So look for the downside move for about probably 65 pips. All right. Going to be tough to trade it. Dollar yen. All right. Dollar yen. Let me put this up here. All right. So we tried to trade this morning, and we only got one little shot here. We may have somebody in it at the 382, but we don't have all of us in, so that's it. Our target is down here at 147.57 now. Now, tonight, it's got a big ATR, 121 pips. So if it hangs out down here, it's going 121 pips to the downside if the dollar goes down. That's 4 T30s. 1, 2, 3, 4. It's 120 pips. So look for it to come down into the 147 area, right in there. From there, that's a big opportunity, folks. So watch for it in the Asian market. Aussie dollar, all right, trying to push it up. We don't have enough room to trade it. It's got a low ATR. ATR on Aussie dollar is only 57 pips. That target is 65.40 up there, just above the ATR right there. Nothing to do on it. All right, Euro Yen, we're in this trade up 45, 50 pips right now, looking to come down here to 158.73, and Euro Yen has 115 pip ATR. We make that trade, we're going to walk away from about 250 pips, folks, if it goes. All right, we're already up, so we're in good shape. Same thing with pound yen. We're in this trade here live on that one. We're looking for a target down here, 185.43. Pound yen has an ATR of 134 pips a day. New Zealand dollar, right? New Zealand dollar waiting for the breakout up. It's a low ATR, can't trade it. It's 55 pips, so 55 pips from down here. You don't have 55 pips. Target is 6,100 there. Walk away from it. Aussie yen, right? Aussie yen. Well, we needed a pullback on this breakout. We've got it now. So watch for this tonight in the Sydney and in the Asian market. Big opportunity after 5 o'clock. You'll get a new ATR. Aussie yen has a 66 pip ATR. Watch for it to come down here. This is 1T30, 2T30. It's down in this area right here at 95.80 area, right in there. Can't trade the euro pound because the euro pound ATR is really low, only 35 pips. Euro Aussie, however, we can. It's got an ATR of 111 pips, and we're almost at target right now at 111 pips. And the target is 64.68. After 5 o'clock, you're going to get a new ATR. All right, watch for this to go down. All right, dollar's coming down. It's coming down. You're below the MACD. So watch for that 111 pips to the downside. All right. Pound, find those wide open spaces. All right. Pound Aussie, it made an effort to get to target. It's now reversing right now. We're below the zero line, so this is a pullback right now. And get that rid of this. Yeah, there we go. A pullback, and we'll watch for it to go down. And we, it almost did its ATR right there. We won't trade it until we get a new ATR, but we're going to go to the downside on it tonight. All right, most likely, if the dollar proves itself. Pound Aussie is 118 pip ATR. You're in New Zealand, all right, stuck inside a pennant here, as you can see. Typically, this pennant, because of this up move, goes up, but with the dollar flipping, it's following the dollar down. So our target is down here at 76.19. The ATR is at 76.30, and Euro New Zealand has an ATR of 125 pips a day. Pound New Zealand, all right, we initially started up, and it goes half the time with the dollar, half the time against it. Dollar's going down, and we just got a zero line break to the upside. The target is up at 2.0802, so 2,800 basically. And Pound New Zealand has 143 pip ATR. What's the fib sequence number? 144. Gee, I wonder why they're doing 144. Notice the 144 there. This is what they do day in and day out, folks. Know your Fibonacci sequence numbers. All right. If you know them, you can extrapolate the information. All right. If you don't know them, you're gambling. All right. Over to New Zealand yen, we're 2/3 of the way to target now. We don't have enough room to trade it. We have to have 55 pips or more, or we don't trade. All right, New Zealand yen has a 58 pip ATR. That's from all the way up here. So you can see there's only 15 pips left. Target is at 89.66. We'll see how that works out. Aussie Swissy and Aussie New Zealand both have too low an ATR. Aussie Swissy's 40 and Aussie New Zealand's 45. We don't have 55 pips right now, so we can't trade them. They're great when we get them, but there we go. All right. Pound Swissy to the pip to its ATR, and then rolled up and took the next target out, and they're done right now. Wait for 5 o'clock, you'll get a new ATR. The MACD tells you you're a buyer, you're a buyer. Pound Swissy ATR is 60 pips, so it's tough to trade. You got to get it right at the beginning of the move. All right. If it puts a higher low in, you got to be right there. All right. There we go. All right. Anybody got any questions on that? All right, fast trackers, do we need to go to market analysis this morning? Fast trackers? Yes, no? 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 Okay, no, we don't need to. All right, everybody, be careful. I'll see you tomorrow, and take it easy. Let me stop this recording on